YouTube. Let's see if it starts feeding through. Good house. Alright, cool, so play. I'm pushing play.
Should do it automatically. There we go.
Ah, there we are.
We have a strong health.
Why is it so blurry?
Fuck if I know. Oh, that's why.
Wonderful. Let's just wait for some people to start arriving. So click it, go from unlisted to listed.
Public.
Where do we learn to trade, Scotty? We actually learned to trade. I was part of a trading desk. I was brought into it by about 5 people who are basically my mentors. So I learned that way, and I literally taught Edward and a bunch of other friends to trade once I became competent. That was probably like 5 years later or 7 years later. So it was a hell of a journey. I made a lot of mistakes at the beginning, like every trader does. But as soon as you sort of start figuring out that the markets are totally against you, then you can trade around that, and you actually start looking at different things. Like all of the education out there in the stratosphere, so to speak, is one thing, and cool. They teach you reversal patterns and you know, and all that sort of stuff, and entry points. But until you actually figure out that the markets are not there to help you, that's when your mind opens up and you actually start looking at trading completely differently. And that's where you go from being one of the 90-90-90, which is 90% of traders lose 90% of their money within the first 90 days. That's when you start becoming that 10%. The markets work basically on this principle. There's a level. Let me show you on Bitcoin here. Yeah, let's go straight to Bitcoin. The markets are
Just on E.
Oh, sorry, there we go. Let me just get this up. There we are.
So go back to here.
Oh, good.
Yeah.
There we go. So the markets work in this sort of fashion. So let's have a look at this point. Actually, where we're going to have a look. Let me find a nice trade where the markets have got. Here we go. This double top is a classic example where the markets go against all traders. So let me just put on a position. I'm going to put on. I'll put a short in there, and we'll say we start, because there's a railroad pattern right here. So see if I can zoom in on this actually. There we go. Let's pull this back in a bit. Auto. I'm going to bring this chart right in here so we can have a look. Alright, so let me just scale this down as well. So we'll put a temporary short position on here, right? Obviously the benefit of hindsight is a wonderful thing, but in this case I'm going to show you exactly why the markets are against us. So right here we're seeing a railroad on the first peak of this particular double top. Now with the benefit of hindsight, obviously we can't see. Let me just put a box over it so we do have the benefit of hindsight. Don't, rather. There we go.
think it's still on ETH.
Is it?
Yes, sir.
Okay.
Yeah.
So this is our first live stream. We're still trying to figure out
some of the software stuff.
Oh, there we go. There we go. Sorry.
Cool. Good man.
There we go. There we go. We're on. All right. So let me just bring you up to this this double top here. All right. This beautiful double top here. I'm going to, for the benefit of this exercise, I am literally going to put a box over. Oh, where's my? I had this on last night as well. Here we go.
What are your favorites, bro?
Oh mate, I turned them off. I can't get them back. All right, for the benefit of hindsight, I'm going to turn this entire area off. Let's just do it there. All right, cool. Format that. Border black, background black, 100%. Oh, there it is. Well, it's fine.
Yeah.
Okay, cool. So, for the benefit of this exercise, I'm going to show you what I mean by the markets going against traders, and it's a pretty easy thing once you can see it. And a lot of traders, once they figure this out, start making substantial amounts of money. All right, cool. So I've got this box here, and it's taken over current price, just so we can just ignore it. I'm going to pull this up a little bit and pull it down. There we go. So right now, right here, there's an there's a candle there that's indicating a bearish reversal, and most traders go, right, bearish reversal, let's go short. And that's exactly what people will do. They'll put their short in, they'll put their stop loss up here above this wick, and if, as you can see, as I've just highlighted, this area here, the market's gone up and pushed above that price to stop everyone out, because they know that they'll put their stops on that previous high, which is exactly what's happened here. So this particular one here has literally just touched it. All right, so you can see the previous high here where my cursor is, and then you can see this high here where market's pulled down, it's gone back up again, and that's where the market catches everyone. So if you were short, if you were looking at going short there, you would have been stopped out. All right, and then people would have seen this deceleration here and gone, no, fuck it, the market's going long. So what has the market done then? It's pulled up, and everyone's like, yep, cool, it's on a run, and then it's pulled down. So in both directions, you've literally been stopped out because you've jumped into the market and you haven't read the market correctly. The way that you actually look at this is like, all right, cool, we've got that signal. That is the long-term trend line, this yellow line here. I'm going to put my stop loss above that line because we have reached it and hit it. Now, you can't do that when you're in areas down here below that support and resistance line, and that's why they're so imperative to trading, is because once it gets here, it's doing one of two things. It's either closing above that line or it's pulling back down off it. And in this case, you would have been right to, most people would have been thinking, all right, cool, we're going short here, and they've gone down short, and it's come up and stopped them out. And vice versa, people would have just waited and gone, oh, no, there's not enough momentum there, there's not enough volume. They would have entered long, gone up, and it would have just swung back and stopped them out. So both sides of the trade would have been stopped out. The smart trader, as I said, that knows how these markets work, would have put their stop just slightly above that long-term resistance line, waited for the swing, the double top, and then once the double top formed, they would have come back down around about, what are we looking at, 1646, shorted that market, and boom, it would have fallen right down to the bottom here until we got this pattern down here, which is again on a support line, a very strong support line. That's how you trade. Like it's quite a different beast once you get your head out of the fact that you've learned the candlestick patterns or you've learned support and resistance. There's more to it than that. And that's what a lot of people don't tell you when you first start. What are your thoughts?
Yeah, no, I agree in a major way on that. The first thing that happened to me when I first started trading was a lot of that. I wasn't expanding the screen. I wasn't looking at the long-term support and resistance. I was just looking at maybe 2 or 3 candles, or even just a few hours back, and that's not helpful because you're not having sort of a look at the entire market, and you're not back testing, which is a very important thing that Richie's talking about, because with all these things, I mean, you're just studying patterns. It's like studying history. And if you backtest far enough, you start to see the patterns, and you won't get stopped out because you won't be surprised. You'll know, 50 pips or whatever it is will be your safeguard.
That's right. I might just interject there. And when you are backtesting, unless you're in the frame of mind where you know that the markets are going to stop out both sides, then it's quite useless. It's quite a useless process.
Sure.
It's easy to go through and backtest and get pattern recognition. I'm all for that. But if you're looking at trading, you've got to realize that the market wants to stop you out, because that's how exchanges make money. They don't make money off of you being a profitable trader. And at the end of the day, that's just the shame of it and the reality. You can actually see down here, there's a double bottom down here. People would have gone net long on that as well. And again, it would have come down and stopped you out again. There's several of these instances that unfold every single day on all currency pairs. It doesn't matter if it's crypto or Forex,
or even stocks. I mean, you'll see false signals all day, and they're there put specifically just to stop you out and for other folks to get very wealthy. And
that's it. Like I mean, retail traders and rookie investors are looked at like just cash cows. Like I've met many people over my time. When they say, "Oh, what do you do?" I say, I'm a trader. And they're like, "Oh yeah, I tried it and I lost a bunch of money. You're going to lose all your money and all that." And then, they don't even want to hear my success story. And to be quite honest, I don't want to fucking tell them. And I don't want to get. There's so many times that I've got bailed up in like social scenes with, with my wife or my friends, and you say that you're a trader, and then all of a sudden there's some dude's just like rapping onto you, and you literally can't peel away from the guy because he's read a couple of things on the internet, or his opinions are so strong. He's got a couple of coins
and he's in the know.
He's got a couple of Ethereum, or he's got a couple of Bitcoin, and he's made whatever it is 80% on that investment, not trade. And you just get stuck in a corner. So like when I go to social circumstances now with my wife or friends, I turn myself into a real estate agent, or all manner of things. It's quite a common joke, like, what are you going to be tonight? And it's just for the sake of my insanity, because there's a lot of bullshit out there. And this particular space, the crypto space, I haven't seen more bullshit in all my life. And it's well known and well documented in Forex that there's a lot of rookies out there. They're the best trader in the world, and they got bundles of cash on their beds, and they're driving around in a Lamborghini that they've rented for the day. All these things, but they're not actually profitably trading. They're what is it called?
They're speculating, and sometimes they get lucky, and a lot of times they don't. It's a bit more challenging in the world of crypto to spot the folks who are telling you lies. For a couple of reasons. One, there's not as much history with crypto. Two, because so many of the great cryptos are in a bull market, everyone can look like a rock star. Whereas, if you have something like Forex, well, you've got to trade both ways, and you can only be so cool for so long. But yeah, you've got to really be careful about who you're getting information from. And if someone says, be a millionaire in 24 hours, you just got to go click goodbye, because that's not for you.
Run away from that fool.
It's not going to help you.
You know what? I beg to differ on what Ed's saying about it's hard to spot. It's real easy to spot. Anyone under the age of 30 that's claiming to be a trader and a successful one is fucking bullshitting you. Like, there's no two ways about it. You can't be a successful trader unless you're probably 0.5%. Now, Ed's hit the nail on the head where he said everyone's a rock star in a bull market. That's 100% true. What differs trading from investing is, there's this hodl, if you want to call it, or in the financial markets, it's a hold trade. That's the difference. Like, you can make money long term off of anything if you're willing to ride out the retraces like we've just had with Bitcoin, Ripple, and Ethereum, and a few others. If you're willing to ride those retraces out, and you've got enough stamina to stay in the markets, and you're going to make money. The same with the stock market. Any blue chip investment, you're going to make money off it if you just hold on to it. You've got inflation on your side. Everything moves up sooner or later. The market goes up like we do, like we've just recently seen the crypto markets. Markets go up, they pull right back down. As they're pulling down, everyone is jumping ship. Like they're literally, they think they're about to drown.
And so they're the ones who lose.
Yeah, they're the ones literally losing. So when you're anyone looks like a rock star in a bull market. Like it's one of those things, and you know, crypto is on the tip of everyone's tongue at the moment. You know, instead of us making like 0.00100% change in maybe the USD a day, you know, crypto's jumping about 30% on a good day, and it can even be more. So people are in this mentality that this is just a short-term fix, and there is no get-rich quick scheme ever. Because of the volatility in the markets. That's a good thing. That's undeniably fantastic. But because of the volatility, we just see these massive spikes. There's people piling in and piling out as fast as possible. People are jumping ship faster than they're entering at the moment, which is why we've seen this decline. Now, all the markets are in a bullish phase. They're not bearish whatsoever. Because we've had a retrace of maybe 30-40%, it doesn't mean that the markets are in a bearish phase.
Just add a bit to that for sure. So Richie's spot on with all that stuff, and this is something I can't stress enough, is that you can make money if the market is doing normal things, but if you want to get wealthy, you want a correction, you want a crash. I mean, the people who got rich in 1929, and there were plenty of them, those were not the ones who sold the position. They doubled down.
Black Friday,
yeah. I mean, this crash in the 70s, you know, 87. I mean, like
2008,
2002, when the dot-com bubble burst. You know, there were people who went and reinvested, and that's how you get extreme wealth. Is really, you know, getting involved in those moments when these are kind of historical moments where you can buy in really, really low and just ride the wave. And the thing is, like, you know, Richie was saying, I mean, you know, we've covered some altcoins in the last week that had like 116% turnaround in a day, and everyone wants to be part of that. And yeah, of course, you know, you put $500 and now you've got all this money coming out, but that's not really investing. You know, that short-term gain, you know, and it's certainly not trading. And what you really want to do is you want to
pretty speculative.
Yeah, it's just speculation. But imagine for a moment that you put in an investment, put in a trade, and you waited 2 years. Like if I said to you right now, well, you know, you can have $1,000 tomorrow, you can have $1 million in 2 years. What are you going to do? And like it's really just that simple. And that's where you've really got to separate the traders from the speculators.
I reckon you might want to close that gap between 1,000 and $1 million.
You know what I'm trying to say? Just figurative. Yeah. $10 and $50, guys.
That's pretty better.
But it's one of those things where a lot of people just look at short-term gains, they get excited about it, and they don't think of the future. And a lot of these good traders, these trades will last a year or 2 years or longer. So, yeah.
Yeah, absolutely. It's one of those things. It's you know, it's a long-term journey. If you're looking for a quick fix, exactly like we've seen in the forex markets for the last decade, people just get cashed out. Like they literally get stopped out. They just get absolutely throttled by the industry, and it's because of these scenarios here on like I'm highlighting on the Bitcoin chart, where people just go and they jump in the wrong direction. I was watching a young fella on YouTube yesterday who was pretty amusing. He's got quite a personality, never shows his face. I don't even remember what his handle is, but he's I think he's from Brooklyn or something. He's got a pretty wild accent. But this young fella was on Binance. He's got a trading bot going. He's got Profit Trailer, which, by the way, I'm all for. I'm absolutely all for it. I don't know how long that run's going to last, but as long as that run does last, and Binance, Poloniex, and Bittrex allow it, then jump in on it. Like that's insane. It's what is it? It's about I was speaking to someone from Profit Trailer this morning, and he said, I said, look, just give us an average of percentage and what you're turning over per day. And he said, well, you know, as you know, it's always different. Said in November, December, it was 4% a day. There's not too many traders on this planet that can pull that kind of number out of their hats. He said, but at the moment, because of the dive, it's about 2%. Now, this is a guy that works for Profit Trailer, and he knows the system inside out. So you got to keep that in mind. Like you can't just jump on here and jump on Profit Trailer and expect to make those kinds of percentage without any kind of trading knowledge or any kind of strategy knowledge
or knowledge of the platform and all those things.
Yeah, like if you're willing to put the time in and invest some time in education and stuff, then yeah, you definitely will see these gains. And he sort of said to us, are you guys looking at having a go? And I was like, well, I wouldn't mind if, you know, you're pulling
4% a day, bro.
2 to 4% a day. I said, you know, and I said, what's your trading history? He's like, 0. I just know how Profit Trailer works, and I figured it out from there. And I'm like, righto. So I said, yeah, we'll give it a swing.
I'll just throw something out there.
Yeah,
just
sure.
so sometimes you talk about percentages and people get lost in the numbers, but just think about this as a bit of context, folks. If you're at 1% a day, you're doubling your account in just over 3 months. So just put that in perspective. If you're at 2%, you do the math, and you know that's really important to think about. You know how quickly you can sort of change your future. You know, so
yeah, absolutely. I mean, you know, as I was chatting to the fellow this morning, I did the math on a $5,000 investment, and that $5,000 investment, if you're at about 2% a day on average, is about 1.4 million in 12 months, which is kind of absurd to think.
It's a little bit nutty.
Yeah, I suppose that's the biggest reason why Ed and I have jumped onto crypto, because, yeah, cool, we make a lot of cash on the Euro USD, the GBP USD, you know, all the 5 majors that we primarily trade in the Forex markets. We're living pretty comfortably. But with crypto, we could be living insanely in a much faster time. And
balling, I think that's the technical term.
yeah, literally. We could, with our knowledge on patterns, of knowledge on how the markets are working, and don't get us wrong, like the crypto markets are no different to any other market. Same patterns. They've got the same patterns, there's support and resistance, all of the technical features.
Trading sessions.
The retraces, like this common retrace was clearly Wall Street, because we had a discussion about it a week or so ago, and I said, I was like, this current drop is too significant for something not to be happening. And we did a part 1 and 2 on our channel recently.
I'll just interject and give a bit of a compliment, because sometimes he's got a bit of Nostradamus happening kind of thing here. There was a major firm on Wall Street that said they were buying into cryptocurrency, and then he told me that afternoon, he's like, watch what happens to the market. It's going to go way down. And it was like 48 hours later, and it just went like that. So
there were double tops across most primary pairs. I picked it, and I figured out what was happening. I'm watching the news consistently, and what's going on there? Watching the news all the time, just for, you know, because in Forex, we have economic news releases, right? You can bring them up on your charts, and they just sit down here with little flags, and they basically tell you when the interest rates are going up, or whatever it is.
Jobs reports or something.
Jobs reports, the non-farm payroll if you're doing the USD. So we don't have that in the crypto markets just yet. But once we do, and once crypto starts reacting to these news reports, as they are with your CNBC or your Bitcoin.com, or your, what's the other one, the CNN? CCN. All those news releases, that goes global, and that's what people are reacting on. So it's kind of no different. You just don't have the ability to have it on your chart at the moment. So I'm watching a lot of stuff, and that's where I got wind of Wall Street wanting to create a short market for cryptocurrency. And as soon as that happened, the market's plummeted. Now, Wall Street don't want to buy in, and no exchange wants to buy in at $20,000 a coin. All right, that's just reality. They deem that to be severely overbought. So when you're looking at your RSI indicator and you see it going into overbought territory, that's what Wall Street will deem the price of Bitcoin to be. So it's severely overbought. Whereas us as traders, and you obviously as investors and traders, or whatever that you are, you don't see that as being overbought. You see much more value and benefit in Bitcoin. And we've all heard the reports. The Winklevoss reckon $50,000 a coin.
Yeah, and they're not alone in that regard.
Look, I'm totally by their side with that, because we've got a market cap, only so many coins, so value is only going to go up.
Yeah, there's going to be scarcity in that market.
Yeah, absolutely. So it's that's where the benefit of cryptocurrency lies. It's not like your USD. What you said about the USD, how you can burn dollars and you can create dollars, and then you've got inflation on your side.
Yeah, that's the one great thing about all crypto folks is that, well, I'm going to say all crypto, but certainly like Bitcoin, because it's capped at 21 million coins. There's always going to be scarcity because there is a finite supply. It's not even like things like gold is one of my favorite assets to trade in the world of Forex, but we keep finding more gold every year. We keep mining it, same as things like oil. So there's not the same level of scarcity. This is a finite resource.
That's right.
So it will probably continue to go up. But what Richie said, think about Bitcoin before Christmas. I think it was around mid-December. It was bucking on 20,000, and just around that time, I won't name the institution, but they got in. They really bought in heavy, and then it wasn't long after that we went on a pretty quick train ride down to, I think it went down to 9. I mean, so this is crazy talk.
Around 7, wasn't it?
Pardon me. Yeah, that is. Yeah, it did go lower than that, and just consider buying in at that rate and going back up to 20. It's this is a great shift. And what if it goes to 40 and you bought in at 7? So these people don't have your best interest at heart, and they're trying to make $1 or quite a few of them in their own way, and that's where you just got to be sort of cautious and you make sure you're reading the signals in your charts.
Yeah, absolutely. So with Wall Street coming in and wanting to present a short market into crypto, they're going back to that whole thing that they're not willing to buy in at what's going on here. They're not willing to buy in at the rate that everyone's been purchasing at, because the sole purpose of it is for them to make money. Now, the scary thing about Wall Street and every other major FX exchange or asset exchange that we have on the planet is they're pretty much governed by the same people. There's not too many different exchanges that aren't governed by the same people. Most central banks around the world are owned by one group. I think there's only 2, is there? 2 left?
I think there's like 5 or 6 countries in the world left.
There you go, 5 or 6 countries.
This is like, there's like 190 sovereign states in the world.
Yeah, right.
So that's like 1.5%. It's tiny amount.
So there's not too many central bankers. So there's this massive group of wealth, and that's what controls the financial markets. Now, when they want something done, doesn't matter how much of a market cap Bitcoin has or how much of a market cap that Ethereum has, they just get it done, right? So looking at the daily here on Bitcoin, right? If I'm going to be real about this, and I'm going to put a how do I bring my fucking things up again? Dude, it's been shitting me.
You're such an organized fellow.
I know.
All your things are going.
Yeah, how about I favorite something and see if it'll pop up?
Is it coming up?
Negative.
No.
Anyway, what I'm going to do is I'll put this fib retracement from the previous bottom, which is here, because we've seen this move. It's a nice little arc there, and then this is the second move, right? So we could either put it here or we'll put it at the real bottom, which was down here. We'll pull that right up to the top, right? So we always want to go up to the top wick, which is right on that particular management zone that we highlighted earlier. If you look at price dipped down to 78.6% on the Fibonacci. That's a really, really good level, all right? A lot of people, the perfect ratio is the 61.8%. really good. And most times you'll see crypto pulling back out of that zone. If it's gone bull, it's pulling back down. If it's gone bear, it's pulling back up. So when we see this big move here, this is all, this particular, I mean, obviously it's a man-made move, you know, obviously, because people own these coins. What is it? There's, but there's, the thing about this is, this particular move right here is just completely unheard of. Yeah. Now you can have a look at Ripple, you can have a look at Ethereum, and you can have a look at Bitcoin, and you can put them all side by side. That's exactly what I'm going to do. So this is the daily on Bitcoin. I'm going to switch over and check out Ethereum, and we're going to go there, and we are going to put Ethereum on the daily. Now we went over this on our
on Wednesday session.
Yeah, Wednesday and the previous Wednesday we did a part 1 and a part 2. So we did this session. So if you look at this is exactly the same formation as Bitcoin, and Ripple is exactly the same again. So I'm just going to transfer over to Ripple, and so let's just pull up Ripple, and I'll show you exactly the same chart and exactly the same move. It's ridiculous. It really is.
It's just aggravating because it's
not aggravating. It's. I mean, it is what it is. You're part of a. You've got to realize that you're part of a bigger beast, and if you fight the beast, you generally lose. But if you go along and run alongside the beast, then you're gonna win. That's how we trade. So look at that. That's the Ripple chart. They all have this major peak, and they have this dip, and then they have a retrace. Obviously, people start thinking around this point, price is going back up. What do? They enter long, price comes back down, stops all the motherfuckers out. It's as simple as that. But
it is amazing when you look at the the three of them side by side, and Richie's been trading for over a decade. I've been trading for quite a while myself, and I think at one stage we were trading like I think 16 pairs if we included gold and all the minerals and all that kind of stuff. I'd never seen that. No. Not quite like that.
There's that move again on Ethereum. And even when it got down to the bottom here, these candles are exactly the same length, same formation, same pattern, everything. Everything's completely the same. Now, that has never happened in the history of trading across any asset. It's not a done thing. So there was a hand at play here, and I believe that hand was Wall Street. Just because they did launch and say they wanted to get in and they wanted to be able to offer long and short positions in cryptocurrency and the primaries. So driving that price down to about, I think it was about 700 bucks. On Ethereum is about 7,000, 6,000, 7,000 on Bitcoin, and I forget what it was in Ripple. But that's the perfect time for them to enter. Now watch these markets slither on up. We've broken through a couple of good management zones just recently. We do have the last 3 days of severe deceleration on Ethereum. As you can see, that is there. So we're back to the 4-hour chart. So every one of these candles represents a 4-hour chart. But you can see, I did draw this box around from yesterday from my vlog upload, that this consolidation point needs to be broken. We do look like we're doing that. Sometimes this does happen on a weekend as well. Like you might get to about 6 p.m. on a Saturday, and all of a sudden there's just a pump on the markets and people are buying in.
Are you still like getting used to that, like compared to the world of Forex?
Yeah, that's another significant difference. Is you can trade 24/7, whereas
all the time.
Forex is basically Monday to Friday, and you're done. You close your trades out on a Friday and reopen them up on a Monday or Tuesday. Generally on a Tuesday. Monday's pretty shit. You've got to figure out what the markets are doing. Same with the London session though. Like the London session really is only like Wednesday, Thursday, Friday. If you want to be part of it on a Monday or Tuesday, it's basically at your own risk because of that whole stop out feature that the central banks do. But other than that, like the London session is pretty profitable. I've definitely doubled an account in 4 weeks on a good month, and put maybe 40-50% on just using the London session strategy on other months. Very, very profitable. But yeah, I suppose getting back to the trading here, like if we're looking at sort of a long-term analysis on ETH, we definitely want to see this particular management zone. I'm just going to maybe make that box a bit bolder. We need to be breaking out of this box to the upside and closing above it. The closing of the candle is really significant to any market direction. If you don't get the candle closing above a situation and you try and enter, then the market will go against you 9 times out of 10.
You're going to get stopped out.
The same as if it breaks down and breaks below. If it breaks below, we're in trouble. We're heading back down for a little bit. Because if it broke below, that means we'll be breaking below this previous high, which is not a good. It's not a good thing for an asset to do. Is break below previous highs or previous lows. Once you do break below the previous higher low, then you're definitely in for a bear move. Just obviously we've got. If we look at this, we've got a high, a lower high, another lower high, we've got a lower low, sorry, a low, a lower low, and then another lower low. That's actually a good little pattern there. The markets also work in clear cycles. So if I'm to show you that daily again, because of the relative new nature of Ethereum, this will be classed as one full cycle. So you see that picture on the internet, which is there's all like the jubilation. You've entered trade, you're making money, you're excited, you're pumped, you're going through the roof, you're going to be the richest man in the world, and then the market sort of tapers off around here. If I show you that on the 4 hour, it'll probably be a little bit better represented. So as you can see, that's that same move that we're looking at. You're rich, you're rich, you're rich, you're going to be the richest man in the world, oh my god. And then market either tapers off and just comes back down, or it goes into this particular pattern that we're seeing right here, which is your double top. There's actually a triple top happening. There's 1, 2, 3.
I've seen a lot of those on, especially the smaller time frames on crypto charts.
Yeah,
they're really frequent.
If you're to trade one strategy, definitely look at double tops and double bottoms. They play out consistently. I think they have a probability rate of about 62 to 65%, which is fantastic. When you think in the grand scheme of things, with compounding interest, you only have to be right 45% of the time to be in profit. With obviously with compounding interest. So you're going to be the richest man. You're going to be the richest man. Now you get a little bit panicky. Right, you start panicking. Oh my god, I'm going to start killing myself soon because I'm losing all my money, and you end up back down here. Now the rookie would be pulling out from all down here. Like this is exactly what's happened. Like a lot of people just sold out, and cool, that's great. It depends on your strategy. If you did pull out around this point here, then you're doing really well. If you didn't, if you caught it down here, or you caught it down here even further, then you're not doing so well because you haven't read the markets. You haven't actually noticed what's going on. Now, we knew that these things weren't going to go down below this, where my cursor is here. It wasn't going to drop down below $290 or whatever it is. If it does, then that particular asset is going to be in a bear market. All right, and if it stays down there for more than a quarter, it's definitely in a bear market. So price was going to reverse somewhere. Now, we were looking for a double bottom as traders. Double bottom didn't present itself. No, this bull move off of support did. So again, we've got the support line running through. Let's pull this. What's going on there?
Wrong direction.
Got the old Jiminy Cricket lined up. So we've got the support line running through there. Price hit it and bounced off. Now, we knew that price was reversing around that point. If it didn't reverse around that point, then we'd be in trouble, and we would have been hitting deeper because it would have broken support and turned it back into resistance. Now, the common thing that happens with that is, I think it's on Ripple. Let me just bring that up. Is it Ripple? Nope. Is it Bitcoin? Maybe it's Bitcoin. Let me just have a look. I'm pretty sure we've just had a really cool move at Bitcoin. Is that? No. No. Anyway, I was on one of the charts that I was looking at, and it showed that the long-term resistance had been it's here, it's sitting right in front of me. What am I doing? So if I draw this,
it's hot out today. That's what it is.
It is. Oh no, it wasn't. Sorry. My mistake. It was on one of these charts. Anyway, long-term resistance had been penetrated, price had gone up, retraced back down, turned it into support. Very significant. And then price had meandered and gone on to, it's gone back into full bullish trend.
It's very exciting when you see that, guys and gals, because then you know that it's a really good opportunity to be back in that marketplace.
Yeah, for sure.
We see it much more often because this is still so new, the crypto, but we see that all the time in the world of Forex, and it's so exciting. It's like, okay, cool, we're in for a new run. And there were a couple of penetrations this week, which we'll cover in Eddie P's Forex review. But yeah, it is good, and then you're sort of locked in for a longer time frame so far as your trade. But yeah, with this one at the moment, you can see the consolidation in recent days, and sometimes it's just sort of a waiting game, isn't it? And,
yeah, absolutely.
Yeah, it feels boring, but this is where Richie talks about very often the importance of the psychology of it. One thing that I really struggled to learn in the beginning of trading is when not to trade. Sometimes you just got to hang back, and you said don't trade on Mondays, and that's true. And a lot of times you don't trade on a Tuesday. You got to wait for Wednesday for the volume to come into the market. And if you just start trading like a dick, then you're going to lose all your money. But if you're patient and you wait for the opportunities, then you'll do well. So.
Yeah, absolutely. And the other thing is time frames.
Yeah.
If you want to be successful, you trade higher time frames. A lot of and this is another way to pick out fakers in the market. Not only do they have to be under 30, but they're using crypto terminology, hodl, dip, all this sort of bullshit. That's just a clear sign that someone doesn't know what they're fucking talking about. Using higher time frames takes out all the noise in the market. All right, so if I usually trade the 4 hour, but I'll enter on the 1 hour and I'll monitor maybe on the 30 minute. All right, but I've got to make sure that all those charts are all going in sync.
Yeah.
So if I've got them all going bullish, then the probability is that trades. And I wanted to enter a bull trade. Probability is if all three time frames are in bull markets, then I'm going. The bullish trend is going to happen. And it's the same in the reverse. If I'm going to enter a short, I look at the 4 hour and it looks good for a short. I look at the 1 hour, that's looking good for a short, and I look at the 30 minute, that's looking good for a short. Then that short's going to happen. However, if I'm entering on the 4 hour and I'm going down to the 1 hour, the 4 hours I'm looking to go bullish, the 4 hours bullish, the 1 hour is bearish, and the 15 minute is bullish, then that trade's going fucking nowhere, and nowhere fast. You're going to get a situation like we've got here on Ethereum with this box happening. Like the three time frames aren't synced up, and you'll probably look at Ethereum over maybe 4 time frames, and they'll all be out of sync. They'll literally be going like this. And that's another successful point of trading, is your time frame management. You've got the time frame that you want to enter on, which is the 4 hour. You go down and check it on the 1 hour. Once you've got those two synced up and they're moving in sync and you're looking at your entry, then you go down lower and find your entry point on the lower time frame. All right, and once that's done, then you can monitor your trade on the 1 hour, and you're obviously exiting on the 4 hour. So you're watching your chart on the 4 hour here. You click down to the 1 hour, and that same move is apparent, but there's a lot more, as you can see, a lot more noise in the market. Now, if you pay attention to that noise, you'll pull out of that trade way faster than you usually would have. because
and you're also just more in line to make a mistake. A lot of folks will start out, especially in the world of Forex, and say a 15-minute chart, even a 30, and you can't really react fast enough because you don't really know what you're doing yet.
No.
So it's important to go to at least an hour.
That's right.
4 hours is a good place to live.
And that there is the 15-minute chart. And if you have a look and see how many candles there are present on that particular, obviously 15 minutes divided by 4 hours, that gives you the one candle on the 4 hour versus these. Look at this. You would have been out of there like a flash.
Yeah.
You would have been out of there again.
But
like
just
again.
Think of that 16 to 1 ratio, folks, of that much more noise and volatility. When if you just go into the higher time frame, you can be calm, cool, collected, cool, this is what I'm doing, this is my profit goal.
That's right. You had a nice descending, was it descending? Looks like it might be symmetrical. There we go. Might be symmetrical with that. No, it's descending. There we go. Cool. You got a descending triangle here. Pattern breaks out. Sorry, I'm a Mac user. We've just got this flash ass PC to do this live stream, and I don't know how to work the fucking thing. So look at this. I mean, that's not probably the best representation. Let's make that real for everyone. There we go. Yeah. Oh, a little bit too much. So that is pretty good there. All right, cool. So look at that that little descending wedge there. Classic formation, riding along the tips, 1, 2, 3 touches, touching on the bottom. Price breaks out, pulls down, pulls back up. Generally, that pulls right back down to this management zone. It didn't in this case, but this retest is what I wanted to draw your attention to. Because right at this point in time, if there was significant bearish evidence right here on this 15-minute chart, then there's a high probability that price would have continued from this point if we got the entry point and gone down. But we didn't. We had a bunch of bull candles. That was considered an engulfing on the very least terms. Then you've got the bull, and then you've got down. Like, there's a bunch of shitty candles that don't mean fuck all to most people. So that would have been an entry point. But generally on these little patterns here, they're really good, and have really, really good probability of pulling out as well. Really, really nice little patterns.
But definitely, at least for those of you who are less experienced, stay away from the 15-minute chart. 15-minute
chart's just like a monitoring thing. You just want to make sure that's the direction of the market, that like everything is synced up. You've got to use it as a syncing tool, not so much as a trading tool.
Exactly.
The lower the time frame, the faster the candles move up and down, and then you're getting into kind of like binary trading circumstances where you're trading like the 5 minute and 1 minute. And if you see people trading with 5 minute, 1 minute charts, like, just run a fucking mile. They're going to lose a lot of money, and they'll lose you a lot of money too. You look like a rock star in a bull market, but when you come to, like, it's not too far away that Binance, Poloniex, and Bittrex are going to be offering shorts in the market. And once that does happen, there's going to be some people with some serious bloody problems with the way that they're presenting themselves on the net with trading. And they're going to be bluffed out, basically. They're just going to be seen as fakers. There's a bunch of you've got the guys that are chasing every Ponzi scheme in the book. You've got these kids that are, well, not kids, but people that are trading, pretending to be traders, and turning 1 Bitcoin into 5 Bitcoin. I mean, fuck, if you had any common sense, if you bought a Bitcoin last July, it would have been around Christmas worth about 2 or 3, maybe even more. So you don't have to be a profitable trader to be able to do that.
No.
You're just an investor. You've invested in a coin and it's gone up in price, regardless of what you do as a trader. It kind of doesn't work like that.
I am looking forward, though, to the shorting, because it'll just, for lack of a better expression, separate a lot of the men from the boys.
Absolutely.
And it'll encourage more serious people just to be involved in this.
Absolutely. Like, you've got to, you've really got to be able to trade both sides of the market. Obviously, when you're in a bull market, you don't want to be trading bear moves.
No. Well, it does present twice the opportunities, because there's always another pair, another crypto.
It certainly does. So if we look at this, I'll just put this back on the 4 hour, because The 15-minute is a little bit noisy. I'll just pull this back over. So obviously we're in a bull market here. This we don't want to be trading. If you're a novice trader, you don't want to be trading back down. You don't want to be shorting a bull market. It's the easiest way to get stopped out, unless you know reversal points, perhaps Fibonacci levels, a number of other indicators. They're all lagging indicators as well. So they're based on history, not present time. So you've always got to remember, like the MACD crossover works in theory, but once it crosses over on one candle, it can cross back and separate on the next. Like, it doesn't present in my terms a good strategy to enter on the markets. Neither does the RSI overbought oversold pattern. Like, these are all lagging indicators. It's based on previous history, not current date. EMA crossovers, yeah, cool. It gives you an indication that market is going into a different trend. Yeah.
And even if you use the weighted EMA, which takes a larger value from the last 5 candles, you're still lagging because you're only getting kind of an average of sort of where the market's going from the last 5 candles.
Yeah, that's right.
But yeah, the long and short of that is long and short. No pun intended there. I'm such a funny man. But yeah, those indicators, they're tools that assist, but they're not seers. You know, so they just sort of give you a bit of sort of some better evidence sometimes, but they don't necessarily pick the future. And that's why Richie's such a stickler, if you see his charge for just the bare basics, you know, your long-term support and resistance, your management zones, and your consolidation zones, which are another form of management zones, because that's where the magic really happens, you know? Yeah,
absolutely. You've got to be really careful. You really do. Support and resistance is something that a lot of people just they kind of sidetrack it because they think it's a little bit difficult. But if you have a quick gander at this, I'm going to see. Actually, I'm going to open up a new chart, and I'm going to take off. Am I going to save that? Let's save it as a different name. Rename test. Don't want to lose all my drawings.
Nope.
All right, cool. So let's just make sure my other one's in there though. I'm going to come unstuck. Alright, cool. 1 second. Give me 2 seconds. I'm going to show you how to draw support and resistance the correct way. There we go. Cool. So let me just make sure that saved in properly. No. Fuck it, I'll put it in anyway. I'll delete all these just for the sake of deleting shit.
Bottom, isn't it? Yeah, there you go.
There we go. So let's say we want to put in support and resistance. What we do is we go. See, crypto's a little bit different. We could probably do it on the daily. But you want to switch down to a line chart. There you go. So a line chart just makes everything way simpler. Now, keeping in mind, we use management zones, but we do use support and resistance as well. Okay, so those management zones will always be placed around support and resistance zones anyhow. It's just a larger format, so to speak, because it's pretty hard to get price to turn around on one spot. Like one line. It's pretty impossible to get price continually turning around. So what we'll do is we'll go to the line chart, and then we'll put in a horizontal line. So what we want to look for on these charts is we want to see where a bottom's happen and a top. And now 2 or more makes it a significant level. So we could put a line in there. Let me change my line colors so we know what we're doing. I can delete them afterwards. Let's make them white and bring the size up a little bit. White. There we go. Cool. So you can see that line that I've pulled just because of this retrace here and obviously this peak here. That's one level of support and resistance. Obviously, it's support resistance moving up, breaks through, it becomes support. Goes back up, pulls back down, It's now resistance again, pulls up, and it is resistance, pulls back, goes through, and it'll probably act as support sooner or later, and so on and so on and so on. So the easiest way to do this is
Do you want me to say something?
No,
We've been talking for a while.
Is to do this exactly. Like, here we go. So there's another point here. So we look at this peak and that bottom. So if I just continually do this and hand the mic over to Edward, we'll show you.
Yeah. So basically, folks, what you do is you keep doing this at all the points, like Richie said, that you have at least 2 touches, and you go through it over and over and over again until you cover up most of your chart. Now, don't put too many on there because you will get dizzy and you won't actually see the patterns, but certainly for the major points of support and resistance. Now, once you got it marked up, Richie's probably just going to put a couple more in there. What's really amazing is when you switch back over to the candles and you extrapolate it out for the longer time frame, you just can't believe it because you're like, oh my god, it keeps going back and back and back to these special resistance points, support and resistance points, I should say. And you see that a lot in the Forex market. You can just take, say, 6 months worth of data and then you pull out and you've got 10 years, and the patterns are the same. And that's really good for us traders because then we know where our turnaround points are. And we can build really good, really strong strategies and feel confident about our decisions based around these historical resistance points. So, yeah, booyah, look at that.
So that's how you do it. You do it on a line chart. Save yourself a lot of time and effort. Obviously, you don't want your lines as thick as I've drawn them. You want them thinner so that you don't notice them so much on your chart.
It's good for a point of reference for today.
Yeah, today's just an educational, so we're just going to plot them in there. But
look at that guy right there.
Yeah, look at this. I mean, but as I said, like Ed and I and many other traders, we use those. We use the management zones because obviously you can see here, like, look at this. This would be a zone where we've got a bottom, we've got a high, and between those 2 support and resistance lines would be a zone, all right? That's where price could turn around. As you can see, price has come down, hit it, gone back up, hit it again. We love hitting it. And then it's taken back off. Same down here. Like, we've got this bullish move up.
Yep.
It's hitting resistance, consolidation. This candle's closed above. We know that's breaking out. Price goes up. Again, price is broken out with this particular candle here. We've been locked in this zone here. Price is broken out. Boom. What happens? Price zooms back up.
And yeah, I'll just add to that. That's why it's imperative to have these lines because Richie touched on it about 20 minutes ago. Once you break free, let's say you're in a bull market and you break free to the upside, well then you know where the market's going, and it's the exact same thing if you're in a bear market. So it's imperative you have these drawn because if you don't, if a candle moves 50 pips or whatever, or relative to this maybe a couple of dollars, you don't know what that means. It means it has no significance for you.
Exactly.
So it's imperative that you have these drawn on your charts.
Yeah, it's a really, like, nowadays on Forex I have like a major historical levels plotted, but generally I am literally, if I'm on my 4-hour chart, as you can see when I pull this time frame down, obviously the number of candles increases as well. If I'm trading on my 4-hour chart, these days I'm generally not plotting in support and resistance lines. All I'm doing is paying close attention to these previous highs, previous lows, and making sure that just a little further back that those areas have been tested as well. And then what I'll do, let's just get that out of there. What I'll do is I will use these rectangles, which obviously we speak about quite a lot. And these are our management zones. So as you can see, we've got the low here, we've got this high here, and we've got our consolidation period happening right here. So there we go. Got a little extra box here because I'm still in drawing mode. But yeah, so previous low, new high, like we've got a pullback in there, gone up, tested, come back down, come back up. We're testing again, testing. We want to see price break out of there. If I clone that box, oh jeepers, I am all.
You really got to learn the PC, bro. I know you're a Mac man. I mean, you got like the phone and the things and the earphones.
So useless with the PC. So if I pull this one up here, we've obviously got this previous high.
Just going to add a tip. Sure. Richie just did something that's very important. Make sure you drag these out into the future, because then when it comes to tomorrow, next day, you've got to know where that's going. Because if it returns to it, there we go. If it returns to it or goes above it, you've got to keep using those points as a point of reference.
Yeah. So these levels and these they have the potential to play out for the next 20 years, believe it or not.
Yeah.
It's exactly the same as support and resistance. So when we're plotting these lines in, it's really important to continually pull them off. Like, we don't know how long this consolidation zone is going to go. If it goes like along here, then we'd want to be monitoring it the whole time for that breakout, like we saw previously here. We saw it back here. Where else did we see it? We've seen it a couple of times where prices broken out above those support and resistance lines, closed above, and then gone on those nice bullish runs.
Big time. That's good, man. We've done an hour.
Yeah, we have.
Yeah,
we've been at an hour.
Yeah.
I reckon we're probably going to wind it up now, unless anyone has any questions for us. Pretty soon. Yeah, I think we're pretty much good to roll. Thanks everyone for tuning in. Really appreciate it.
Yeah, a lot of fun today.
This is the live stream, so the first one. So we will be doing this every single Saturday at exactly the same time.
You want to tell them about Double Down, because we'll be rolling.
Yeah, true.
Soon.
Yeah, with the Double Down. So as I made you aware before, I do trade the London session every week, basically Wednesday, Thursday, Friday. We've thought of a pretty cool way to share some wealth with you guys. So whatever we get donated on Super Chat or Twitch or whatever it may be, on the particular live session, I will trade that amount on the following Wednesday, Thursday, or Friday, and whatever profit that is that's taken off of that particular trade, we'll split that with one lucky subscriber. So that's probably the most. The biggest cue of all right now is a lucky subscriber. So if you subscribe to our channel, you watch us on the live feed, then you have a chance to win whatever. Like at the moment, my personal London sessions, I'm using about $500 per trade, and I'm pulling in about $2,000. So nearly 3-4 times as much as I'm putting down. Say we make $100 on here, you could be in the win for 200. If we're making 300, you could be in the win for 600, whatever it calculates to. Yeah, I mean, you get the general gist. The double down is definitely a thing, and it definitely works to your advantage.
Yeah.
It's no skin off our nose. We're literally giving you the money back.
Yeah. It's a good way to just watch a vid, win some cash.
Yeah, just get involved in the session. If you want to know anything about trading, please hit us up. It's what we're here for. We're probably, I hate to say it, probably the only people in the space currently that are actual traders. There's another guy, and I pumped him the other day when we're on Wednesday, the Crypto Crow. Now I like this guy a lot because he's not putting out the perception of being something that he's not. Right? He does a lot of things around ICOs. He does a lot of things around trading bots and all that sort of stuff. And he sticks within his realm. He's not trying to bullshit you, saying that he's going to make you a bunch of cash. He's just giving you awareness of the markets, and he seems to be a very intelligent guy. He's probably the only person out of probably 30, 40 channels I've watched that has anything of any value to offer anyone. Obviously, apart from ourselves with our Forex experience. So again, that's just this. I suppose today it's been a positive and a negative. There's always two sides to every argument. The positive out of today is the trend lines, the market value, etc. The negative out of it was just watch who you're listening to.
Yeah.
If you're watching them for their personality, make sure that's all you're watching them for.
I'll just add a bit to that. That's not just in the YouTube space, folks, or your Facebook live streams. That's on all your news sites. And just because something says MSNBC or CNBC or CNN doesn't mean that it's any more credible.
No, that's correct.
They have their own agenda as well, and all vested interest and all that.
Yeah.
So just make sure that you're vetting your information. You're checking multiple news sources. You're not taking one as gospel all the time. And just be thorough with what you're doing, and then hopefully you'll do well. Absolutely. So I guess that's it for today, guys. I really, really appreciate you tuning in.
and we look forward to seeing you next Saturday. We'll be an hour earlier because we are a little bit special when it comes to PCs. It took us a fucking long time to figure out all the tech and everything. Anyway, we've done it. Today has been conquered. Next week it will be 1 hour earlier, so we'll get back into it then. Anyway, until then, if you want to know anything, send us a comment on one of our videos. Make sure to go back and watch the videos, because the analysis that we do is pretty correct. Like, it's really well worth tuning in for. It tells you, we tell you which direction the market's going. Like, we're not sitting on the fence being 50-50 about anything. We're not those arseholes. We are literally saying this is what we think is going to play out. And, you know, a good percentage of the time it does. So anyway, ciao, and we will catch you up next week.
Take care, y'all.
Stay tuned. Ciao.
Bye-bye.